I didn't blow up my trading account in one day. No, that would have been merciful. It happened slowly, like rust spreading in silence, like a leak beneath the floorboards. First, it was a small loss, then another, then a week of red that I told myself was just market noise. But deep down, I knew. I was lying. I wasn't trading. I was reacting, chasing, clicking. I told myself more indicators would give me clarity, that some new YouTube strategy might finally crack the code. I had 3 monitors, RSI, Mastas, Bollinger Bands blinking like Christmas lights, a 12-tab spreadsheet tracking trades I didn't even understand. What I didn't have was confidence, or clarity, or a damn clue. Then it happened. One night, 2:14 a.m. I clicked buy because a candlestick looked like one I saw on TikTok. The trade dropped like a stone. My heart dropped faster. I closed the position, wiped my face, leaned back, and in the black glass of my screen, I saw something worse than a red candle. I saw myself, pale, hollow-eyed, pretending to be a traitor. In that moment, something cracked. Not in the chart, in me. The market wasn't beating me. I was losing to myself. Every failed trade was just me fighting shadows of who I thought I should be. Everything changed when I stopped asking, "What's the best setup?" and started asking, "Why do I keep sabotaging myself?" I stopped chasing tools. I started studying the one thing no one ever told me to look at, myself. That's when I found something strange, not a strategy, a metaphor, the mirror maze, because that's what trading is, a hall of reflections. Every chart, every candle, every perfect setup is just a projection of your beliefs, your fear, your past losses begging to be repeated. If you can't see through the glass, you'll never escape. This video isn't for everyone. It won't show you magic indicators or 90% win rate promises. It shows you truth, the kind that cracks illusions, that forces you to look at the ugliest part of your trading habits and finally stop repeating them. If that scares you, click away. But if something deep inside just whispered, "It's time," then keep watching. Welcome to Trading Psychology Stick. This isn't another trading channel. This is where illusions go to die, where indicators fall silent, and the mirror starts. We don't teach you how to win. We teach you why you lose. Every trade you take is your responsibility, just like every shot belongs to the sniper who pulled the trigger. Because once you see the mirror, disclaimer, this content is for educational and entertainment purposes only. It is not financial advice, and nothing here should be considered a trading recommendation. You can't unsee it, and you might never trade the same way again. Section 2. The language of light and shadow. The market doesn't speak in certainty. It whispers in flickers, flashes of light, and sudden darkness. Every candlestick on your chart is not just data. It's emotion frozen in time. A moment when thousands of humans clicked buy or sell, not because of logic, but because of fear, greed, hope, or panic. You look at a chart and see patterns. What you're really looking at is a battlefield. Candles are the scars left behind by psychological war. The bodies don't show, but the shadows do. A green candle doesn't mean confidence. A red candle doesn't mean fear. They're just reflections. The wick at the top, that's hesitation. The long tail at the bottom, that's regret. Every candle tells a story, but most traders only look at the headline. They don't read between the shadows. They miss the traps hidden in the wick, tucked in the timing, buried in the sequence. There was a time I treated candlestick patterns like gospel, hammer, shooting star, morning doji. I memorized all of them, convinced they were secret passwords into the market's vault. My perfect textbook entries reversed hard, over and over again. One day it hit me. I was memorizing symbols, not interpreting behavior. Here's what matters. Not what the candle looks like, but what happened before it formed and what it means in context. One trader's bullish engulfing is another's last breath before collapse. You want to read price? Stop thinking like a pattern hunter. Start thinking like an interrogator. Ask, who bought this candle? Who got trapped? Who's desperate to get out? The market is not a puzzle to solve. It's a mood to feel. When you learn to read the mood, the candle becomes a clue. You start seeing indecision, momentum, trap, reversal, continuation. You stop trading the color of the candle and start trading the psychology inside it. Price action doesn't predict. It reveals. It doesn't shout. It nudges. It doesn't lie, but it will expose your illusions. When you force meaning onto a chart, you're projecting. When you learn to read what's already there, you align. Suddenly, you don't need 6 indicators. You don't need Twitter signals. You just need presence. You look at the candle and you feel it. Not because it's magic, but because you've trained your eye to see the emotion behind the movement. Once you see the candle as a mirror, you start to see yourself. But this is just the first reflection. If you think candles are deceptive, wait until you meet the tools that promise to simplify everything and end up clouding your vision even more. Section 3. The seduction of shiny tools. You thought you needed them. The MACD, the RSI, the stochastic oscillator blinking in perfect harmony. They look so intelligent, so mathematical, so trustworthy. Surely, if the indicator crossed at just the right level, the market would obey. Here's what they don't tell you. Most indicators are nothing more than makeup on a corpse, lagging, late, glossy filters covering up raw price reality. They're crutches dressed as solutions, and the more you lean on them, the more unstable your trading becomes. I remember when I first discovered indicators. It felt like unlocking a secret language. I stacked them: volume, EMA, divergence, trend lines. My chart looked like a Christmas tree of false confidence. One day, I had 7 trades open, all confirmed by indicators, and I still had no conviction. That night, 5 trades hit stop loss. 1 broke even. The last one I closed manually in fear. What killed me wasn't the market. It was the noise I chose to trust. Indicators summarize the past with a delay. You're watching footprints, not footsteps, reflections, not reality. Imagine driving by, only looking in your rearview mirror. That's how most traders use indicators, trying to steer forward while staring backward. The seduction is real because indicators feel smart. They give structure. They make you feel in control. Often they're just illusions dressed in certainty. And here's the real danger: they become excuses. You don't follow your instincts because the MACD didn't confirm. You don't take a clean setup because the RSI wasn't oversold. Little by little, your edge dulls. You forget how to read the market because you outsourced your intuition to a script. One of the most painful lessons I learned was this: confidence doesn't come from the tools you use. It comes from how well you understand what they're hiding. Once I stripped my chart bare, no indicators, no signals, just candles. I felt blind at first. Then I started to see. I saw manipulation in the wicks, momentum in the bodies, indecision in the tails. The noise was gone, and with it, the fear. You can still use tools, but only after you've trained your naked eye. Learn to read the raw data first: price, volume, structure. Then, if a tool aligns, it's a bonus, not a crutch. The market rewards clarity, not complexity. When you finally stop looking for perfect confirmation, you start finding true conviction. That clarity becomes even more crucial when you begin to hear the echoes, because some zones aren't just price levels, they're graves. And if you don't recognize the emotional ghosts trapped inside them, they'll haunt your trades forever. Section 4. The echoes in the walls. Support and resistance. You're told to draw them as clean lines, horizontal, neat, logical. They aren't lines at all. They're echoes. The lingering cries of traders who entered too high, exited too late, and got trapped in regret. You see a bounce. The market sees trauma. You see a breakout. The market sees a second chance for someone desperate to get out, even. Every level you draw is not a prediction. It's a memory. The market doesn't just move through price. It moves through collective pain. Picture a battlefield. You weren't there when the bullets flew, but the blood is still on the ground. That's what happens at key levels. When price returns, it doesn't see structure. It feels tension. Traders who bought too high, now praying to break even. Traders who missed the move, ready to jump in too late. Traders who shorted, gripping their stops like a lifeline. When all those emotions converge at the same level, volatility erupts. I remember drawing the perfect zone. 3 bounces, textbook resistance. The price hit the line again, wicked through, and I shorted hard. For a moment, it worked. Then the candle snapped upward like a whip. I was liquidated in seconds. I thought I'd been tricked. The truth was simpler. I never understood what that level meant. It wasn't resistance anymore. It was pressure. Pressure that had built for weeks. And pressure always finds a way to release. You don't trade lines. You trade emotion clusters. Every touch, every retest, every breakout attempt signals not just price, but pain. Ask yourself, who is stuck here? Who is about to panic? Who sees hope? That's how levels move, not because of geometry, but because of psychology. Sometimes the strongest levels don't look clean. They're messy, choppy, inconsistent. Why? Because emotion is never neat. When you learn to feel the tension, not just draw it, you'll start anticipating where the crowd is weakest and where smart money strikes hardest. Support and resistance are not geography, they're history. If you don't study that history, you'll keep stepping on emotional landmines disguised as entry zones. Even these echoes only whisper. The real trap lies in something even more deceptive, a desire so deep it feels rational, a need that ruins more traders than bad entries ever will. And it begins with four deadly words: I think it will. Section 5. The dangerous desire to be right. I think it will go up. That sentence has drained more trading accounts than any flash crash in history. It sounds innocent, harmless, even hopeful. Underneath those 6 syllables lives a silent killer: the need to be right. The most expensive addiction in trading isn't leverage, it's ego. And ego doesn't want to observe the market. It wants to predict it, control it, bend it to its will. The market doesn't care what you think. It never has, it never will. I once built a plan with surgical precision. Multi-time frame confluence, divergent support, candlestick confirmation. It had everything except flexibility. When price broke structure and invalidated the setup, I didn't flinch. I couldn't. I was too invested in the narrative. This has to work, I thought, so I held and held. Until the loss was so brutal, I didn't close the trade. I closed the platform. That wasn't a bad plan. That was a bad attachment. I wasn't responding to the market. I was defending my identity. Traders die not by lack of knowledge, but by refusal to adapt. Want to be a trader? Kill the need to be right. Trade what you see, not what you hope. If the chart changes, your mind must too. The best traders aren't clairvoyants. They're chameleons. They move with the market, not ahead of it. They don't forecast. They observe. They don't marry trades. They date them with tight stops and tighter discipline. Here's the irony. The more you let go of needing to be right, the more often you actually will be. Now you're listening. You're present. You're responding to what is, not what your ego demands. Ego doesn't go down without a fight. It disguises itself as conviction. It wears the mask of, I trust my analysis. Real trust isn't stubborn. It's responsive, flexible, alert. The market doesn't punish the wrong plan. It punishes the refusal to adjust. It punishes the trader who needs to be right more than they need to protect capital. The longer you trade, the more you'll learn. Being wrong is cheap. Staying wrong is fatal. Ask yourself, do you want to be right or do you want to last? Just when you think you've mastered the mental game, the market throws you a new trick, one that doesn't live in your head, but in the shadows of your screen. It doesn't show up in analysis. It shows up in the candle that looks almost perfect until it snaps back and takes your stop with surgical cruelty. The deeper truth: you were never its target. You were just caught in the trap it set for someone else. Section 6, the trap behind the glass. It looks like a breakout, clean, sharp. The kind of candle that makes your heart skip and your cursor hover over the buy button. Then comes the snap, the reversal, the wick, the cold stab of regret as your stop loss gets sliced open. Welcome to the trap. Not just any trap. This is the kind set behind glass. Elegant, deceptive, deadly. Wicks are often misunderstood. Traders call them noise, randomness, market friction. That's a lie we tell ourselves to avoid the truth. Wicks are weapons. They're the surgical strikes of smart money, the way institutions test liquidity, the way the market manipulates emotion. A long wick doesn't just represent rejection, it represents pain. It shows where traders got lured in and where they were punished for thinking they saw clarity. Picture this scene: textbook breakout. Price has consolidated. Volume starts ticking up. A large candle punches through the zone, and you're in with a perfect entry. For a few seconds, it flies, then reversal. Sharp, violent. You blink, and it's back inside the range. A full fake out. Your trade, gone, liquidated, not because you were wrong, but because someone else needed your order to fill theirs. That's how the market works at scale. Big players can't just enter like retail. They need liquidity. They need emotion. They need you. So they create the illusion of movement, wait for you to chase it, and then hit reverse. That wick on the chart, it's the fingerprint of that setup. It says, Here lies the retail trader who thought this time was different. You don't have to be that trader. Stop worshiping candles. Start dissecting them. A long wick on a breakout zone is not confirmation. It's a trap door, especially when it's fast, especially when it looks perfect. Perfection in the market is rarely real. It's bait. The moment you bite, you give up control. The smartest thing I ever did was pause before every breakout entry and ask, who's on the other side of this move? If the breakout is too clean, too sudden, too obvious, it's often been designed that way. The market is not random, it's strategic. It feeds on predictability. Your predictability. What's the antidote? You wait, you watch the wick, you look for the retest, you let the trap spring without you in it. Then, if price returns without panic, without manipulation, that's when you strike. Not like a chaser, but like a hunter who knows patience is the sharpest weapon. Once you see wicks not as candles, but as conversations, you'll start hearing something even quieter beneath them. A second signal, a hidden pulse, one that doesn't lie, one that doesn't flash, one that doesn't manipulate. It's not what you think. Sometimes the truth of the market isn't in the movement, it's in the pressure. And once you learn to feel it, you'll never look at volume the same way again. Section 7. The whisper that exposes the crowd. It doesn't blink, it doesn't flash, it doesn't ask for your attention. Once you notice it, you'll wonder how you ever traded without it. It's the whisper beneath the chart, the pulse behind the price. Volume. Most traders ignore volume until it's too late. They're too busy watching patterns, signals, indicators, all reactive, all surface level. Volume tells the truth. While price can deceive, volume exposes conviction. It shows who stepped in, who exited, who panicked, and who took control. If price is the actor, volume is the script. When you learn to read both, the entire market opens like a play you've already seen. I remember a setup that looked perfect. Textbook structure, clear breakout. Everyone in my Discord was buzzing. The volume, flat, silent, like a stage with no audience. I stayed out. 5 minutes later, the breakout failed hard. It was a trap, a show with no conviction. The volume had whispered the truth. No one else had listened. What most people don't understand. It's not how far price moves. It's how hard it was pushed. A candle without volume is like a gust of wind, dramatic but fleeting. When a candle moves and volume spikes, that's pressure. That's a decision. That's institutional footprints. You can see them if you're paying attention. Volume reveals divergence that no oscillator can. Imagine price making higher highs, but volume drying up. That's not a breakout. It's a slow death. Or a sharp move down, followed by a candle of indecision and a massive volume spike. That's not confusion. That's absorption. That's a market preparing to reverse while everyone else is frozen. Volume is where smart money leaves fingerprints. They can't hide them, even with algorithms, even with spoofing. Eventually, the size must show. When it does, you'll see the imbalance between buyers and sellers like X-ray vision through the candle. Here's the secret most will never tell you. Volume isn't just about spikes, it's about silence. Low volume at key levels often means the big players are waiting, watching, letting retail burn themselves out before stepping in. When they do it quietly, not with drama, with force. Next time you're about to enter a trade, pause, ask, is this move supported by pressure or just price? If the volume doesn't align, step back. When volume and price disagree, price usually folds first. Reading volume takes practice. It's not sexy. It's not flashy. It's intuitive. Once it clicks, you won't just see entries. You'll sense intent. You'll know when the market is moving because it wants to, and when it's moving because it wants to trick you. Even volume, for all its honesty, can't save you if the real threat isn't on the chart. The next move doesn't come from price action. It comes from within. The flash doesn't happen on the screen. It happens in your chest, in your breath. In that second between the candle forming and your mouse clicking, that's where the real war begins. The chart isn't moving. The market's calm. Your heartbeat, racing, your breath, shallow. Your hand, already hovering over the mouse, itching to act. You're not in a trade yet, but you've already lost control. The threat isn't outside. It's not in the news or the candle or the pattern. It's in you. The real monster in trading lives in your nervous system. Fear, greed, hope, desperation. You've heard these words before, maybe even journaled about them. Have you ever truly felt how fast they hijack your body? How one red candle can trigger a childhood fear of failure. How one green candle can awaken a gambler's thrill you thought you buried. I remember entering a trade once. Clean setup, proper size. As soon as I clicked buy, my chest tightened. Not because of logic, because of memory. The last time I took this setup, I got stopped out instantly. My body remembered that pain before my brain did, so I second guessed. I closed early, watched it hit TP without me. That wasn't a trading mistake. That was an emotional echo. Most traders obsess over entry techniques. Few study the biology of impulse. Trading is not an intellectual sport. It's an emotional battlefield. Your greatest threat isn't being wrong. It's staying reactive. That reactivity comes from a nervous system constantly on edge, constantly hunting for validation, constantly afraid to sit with discomfort. You think you're addicted to the market. What you're really addicted to is certainty. You chase setups not because they're valid, but because you can't sit in the unknown. You overtrade not because you see opportunities, but because your body can't handle stillness. You cut winners short because profit feels unfamiliar. You hold losers too long because loss feels personal. The monster isn't in the chart. It's in the moment after the signal, when silence creeps in and your mind screams, do something, now. That's where discipline dies. Emotions are not the enemy, unprocessed emotions are. You can't eliminate fear. You can recognize its voice. You can't kill greed. You can see when it's driving. You don't need to be emotionless. You need to be emotionally literate. The traders who last aren't the ones who feel nothing. They're the ones who feel everything but don't flinch. How do you begin? You breathe. You create rituals before trades. You reduce size until the outcome doesn't move your heart rate. You study your reactions like you study candles. You ask, was that trade based on signal or sensation? Until you master the monster within, no strategy will save you. No risk reward will protect you. No trading plan will survive the surge of the unregulated emotion. Just when you think you've calmed the beast, it reappears. Not during a loss, after a win, when greed whispers sweet lies, when your P&L glows green and your confidence turns to overconfidence. That's when you raise your size. That's when you break your rules. That's when you forget who you are. That's when the market reminds you, with cold precision, who's in charge. There is a way to take your power back. It doesn't start with another setup. It starts with a number, a decision, a contract with yourself that defines exactly how much of you should ever be on the line. Section 9, how much of you is on the line? Risk, such a simple word, such a devastating force. Traders talk about it like it's just numbers. 2% per trade, 1 to 3 risk reward, tight stop, wide target. Those aren't risk rules, they're masks. Real risk isn't what you write in your plan. It's what you feel when money leaves your account. It's what part of your identity you're unknowingly placing on the altar, hoping for a green candle to validate your worth. Risk, at its core, is personal. It's the mirror that shows how much you've actually evolved, or how much you're still trading from insecurity. When you size too big, it's not just aggression, it's usually compensation. For what? For fear, for proving something, for chasing an image of the trader you think you're supposed to be. I once took a trade where the setup was clean, but my size was stupid. Not mathematically, emotionally. I had just come off a string of losses and wanted to make it back. You can't recover dignity through leverage. I remember the trade moving against me just slightly, and my chest caved in. Not because I couldn't afford the loss, but because I couldn't handle the story it told me. You're still a failure. I closed it early, panicked, only to watch it reverse and hit target perfectly. That trade didn't expose my strategy. It exposed my self-worth. That's what risk really does. It reveals what you're still clinging to, what beliefs you haven't questioned, what pain you've been avoiding by hiding behind charts. Here's the hard question. How much of you is in every trade? Are you risking 2% of your capital or 80% of your emotional stability? Are you entering with clarity or with hope disguised as logic? True risk management isn't just about stop losses. It's about psychological thresholds. If losing a trade changes your mood, your size is too big. If missing a move ruins your day, your expectations are too high. If you're adjusting your plan mid-trade to give it more room, your identity is tangled in the outcome. The best traders don't just control risk. They understand what risk means. They know how to protect not just their account, but their mind. They size down until their nervous system stays neutral. They don't need every trade to win because their identity isn't riding with their position. That's why they last. Ask yourself, what are you really betting with? Your strategy, your ego, your unhealed wounds. Risk is not just a function of your system, it's a reflection of your psychology. Once you learn to trade with less of you on the line, you gain access to something few ever find: stillness. You stop rushing, you stop forcing. You begin to wait, not with anxiety, but with power. You develop a new kind of discipline, one that doesn't click until the market deserves your entry. That's when you stumble into a strange, beautiful edge, one most traders never discover. Sometimes the most profitable move is no move at all. There is a moment, quiet, almost invisible, when the impatient lose everything and the patient begin to win. It's not marked by a signal or a spike or a confirmation candle. It's marked by restraint, the power to sit, to do nothing, to not trade. Most traders hate stillness. They call it missing opportunity. They scroll, scan, refresh, redraw, reread. They believe movement is progress, that clicking buttons equals productivity. In trading, motion is not mastery. Stillness is. I didn't learn that from a book. I learned it after burning through 5 trades in one day. Each one taken out of boredom, each one forced, each one violating my system by just a little, and each one red. That night, I stared at my trading log and realized something devastating. None of those trades came from conviction. They came from a need to feel in the game. I wasn't a trader. I was an addict looking for a dopamine drip. So I made a decision. The next week I sat. I watched the charts for 5 days without clicking once. I felt twitchy, anxious, restless. Something strange happened. I started to see. Without the fog of needing to be in a position, I began to recognize quality. Clean structure, real momentum, trap zones. It was like switching from static to signal. When I finally took that one trade, just one, it worked. Not because it was magic, because I had waited. I wasn't chasing, I wasn't proving, I was aligned. That one trade wiped out all 5 of my impulsive losses from the week before. The market doesn't reward constant action. It rewards selective aggression. That requires patience so sharp, it feels like power. You sit not because you're scared, but because you're hunting. You don't rush into noise. You wait for silence to break. You don't guess. You stalk. Stillness is not inaction, it's preparation. It's when you let the market reveal itself instead of projecting onto it. It's when you stop asking, "Can I trade this?" and start asking, "Does this setup deserve my risk?" Most of your worst trades didn't come from bad strategy. They came from emotional urgency, from needing to feel productive, from fearing you'd miss out. Real traders know missing out on noise is winning. If you're serious about leveling up, build space into your process, space to pause, space to observe, space to wait. Your job isn't to trade every day. It's to survive every day until the trade worth taking appears. When it does, you'll know. Stillness sharpens your eye. It slows down your mind. It dials in your edge. Once you get addicted to waiting for quality, you'll never want to go back to noise. There's one more piece to this puzzle. Even with perfect patience, even with a crystal clear setup, even after waiting for days, one thing can still ruin it all. You. Not the impatient you, not the fearful you, the version that believes